What is employer's liability insurance? With so many things to think about and learn when starting a new business, it's no wonder that things get confusing, no more so than insurance and liability cover. So what we aim for in this article is to demystify and explain the common question of what is employer's liability insurance in the UK and what's it for. And employers are legally responsible for the health and safety of their employees while they're at work. An employee may suffer an injury or illness while working for an employer, or may even fall ill after they have left that employment due to work they had previously carried out. In any of these circumstances, a past or present employee may try to sue the employer for compensation due to injury or illness. And this is where employer's liability insurance comes into force. And for the majority of businesses that employ people, it's a legal requirement. So just what is the purpose of employer's liability insurance? Simply put, the legal requirement of having insurance in place is to ensure that the employee gets a fair payout for rightful claims against sickness or injury caused during their lawful work. However, it's also there to protect the business as well. So let's say, for example, a court awarded Mrs. Jones £100,000 compensation for an injury caused by faulty machinery or component failure. Although the company may have accepted liability and may have even agreed the award was fair, it doesn't necessarily mean they have £100,000 cash floating around spare in the business, and not many businesses have. The only course of action for the company will be to try to borrow the money, which potentially could put the business under financial strain, leading to cutbacks and redundancies. And while the court wishes to put the claimant into a financial position that addresses the severity and loss caused by the injury, they also don't want to jeopardise the viability of the business and put people's livelihoods and jobs at stake. And this is where employer's liability insurance really is a win-win. It ensures the claimant is paid their award if the business is not in a position to do so, but it also protects the dependents of the business by mitigating the impact of a severe monetary award. So how much cover is required, and do you need to tell your employees about it? A business must take out a minimum insurance level of £5 million. However, a risk-based approach should be adopted to ensure this will be enough to cover all the costs. In reality, a lot of policies now have a minimum cover level of £10 million, and if you are a group of companies, this level of cover can be spread across a whole group. Once a business has taken out employer liability insurance, it will be issued with a certificate of insurance, which must have the level of cover and the companies it covers clearly displayed on it. A business is required by law to display a copy of the certificate in a place where it can be easily read by the employees. However, since October 2008, the certificate can be displayed electronically. As long as your employees know how to access it and can reasonably access it, then this is acceptable. If an employee specifically requests to see a copy of the certificate, then this must be provided as soon as possible, and certainly within 10 days of the request. Keeping records of certificates. Although now no longer a requirement, a business is not required by law to keep copies of all records. However, it's strongly advised that some sort of record is kept, and this is because certain diseases, such as asbestos-related illnesses, can appear decades afterwards, and an employee who may be affected may decide to make a claim against the employer for the time frame they were exposed to the danger. So is every business required to have cover? Well, the answer is yes, unless you're a business or organisation that is exempt from the Employer's Liability Compulsory Insurance Act. Employers that fall under this category are family businesses where all the employees are closely related, such as a husband and wife, a brother and sister, civil partners, mother, father, grandparents, grandchildren, step-parents, stepchildren, and half-siblings, etc. A business employing only the owner, where the employee owns over 50% of the issued share capital. Public organisations such as the police authority, government departments and agencies and local authorities, the NHS including trusts, and organisations financed through public funds such as transport executives and magistrates' courts. And does a business have to have cover for everybody who works for them? The law requires that a business has sufficient insurance cover for people if it employs under a contract of service, including apprenticeships. What largely determines whether people in an organisation should have cover is the nature of the relationship between the business and the people, and the degree of control the business has over the work they do. Therefore, the following would be a good decider as to whether they should be afforded cover or not. And those would be: the business deducts tax and national insurance from money it pays them. The business has the right to exercise control over the type of work the person carries out and when and where they do it. The business makes a profit out of the work supplied. The business supplies the tools and materials. The person cannot supply a substitute to carry out the service. The person is afforded the same treatment as other workers doing the same work in the same building. But a business may not need to provide cover if the following applies: where the person does not exclusively work for the business and clearly has other customers, where the person supplies their own equipment and materials which is charged back to the business, where the person can supply a substitute, i.e. he employs another person who can do the work. The person is clearly in business for his or her own benefit. The business does not deduct tax or national insurance, but there's a caveat to that. A person may be self-employed for tax purposes but classed as an employee for other reasons. In this case, it would be advised to seek clarification from an insurance provider. So there is a penalty for not having employer's liability insurance, and the law on employer's liability insurance is enforced by the HSE. HSE inspectors can check with an approved insurer whether a business has appropriate cover of at least £5 million. If an inspector asks to see a certificate and it can't be produced, a business may suffer a fine up to £1,000. On top of that, a business can be fined £2,000, £2,500 for every day it does not have the required cover. So, further information. Well, I hope you found this article helpful. If you've got any comments, queries or wish to add anything, please visit the website at www.healthandsafetytoday.co.uk. You can also find the latest information at the HSE, and also advice about whether a person is an employee can be found by contacting the solicitor, visiting a legal centre or a citizen's advice bureau. And as always, the laws and regulations change over time, so please check for the latest updates at hse.gov.uk. Thank you for listening, and I hope you enjoyed the article.